1 second. All right. Welcome back. Hopefully this is working now and you guys can hear me. Now that was fun. Certainly not fun to have one of those when you're on a live stream. There's 100 people watching. But anyways, here we go again. So anyways, just wanted to do a follow-up video from the last one. I really hope you guys enjoyed that one. I certainly enjoyed it, and I could really tell just from the attendance that you guys enjoyed it too. In this segment for NuBank, we're going to discuss the Brazilian macroeconomics has actually been negatively impacting the sentiment of that entire country and their stock market alone. So that has contributed to the 35% drop you saw in NuBank, as well as the 30% drop, or I think it's more like 20% drop you saw in MercadoLibre. And we're going to kind of review the backdrop of that and what exactly happened in that whole situation. I actually have an article here. This is part 2 of the article that I have in my Substack. If you guys aren't already following, please follow the Substack that I so graciously write to pretty often. The link is right there. I'm going to go ahead and leave it in the show notes later on if you guys want to check that one out too. But let's move on. So NuBank Brazilian economics, which is part 2 of 3. Beyond NuBank's fundamentals, Brazil's macroeconomic conditions are fostering negative sentiment. Concerns about accelerating inflation and slowing GDP growth are dominating the narrative as 2024 ends and 2025 begins. We're already in 2025, obviously, but this article was released a couple weeks ago, so there you go. However, according to the economists are forecasting an increase in inflation for December, up from November's 2024 rate of 4.87%. However, according to Trading Economics, inflation is expected to decelerate in 2025. On the other hand, Brazil's central bank sees inflation at 4.9% in 2025, followed by a deceleration in 2027. So really the whole backdrop about this is that inflation is accelerating, which has been contributing to the depreciation of the Brazilian real, which is their currency, and GDP has been slowing down. So those two put together is setting up for a pretty negative backdrop in terms of the regime that's happening in Brazil and also the negative sentiment for 2025. And that's probably the reason why you saw both of these stocks run into their correction bear market territory. And I'll continue with this article and we'll see what else I got here. Brazil, Colombia, and Mexico GDP. Let's examine GDP more closely. While GDP is measured in a country's local currency, it isn't useful for comparing GDP across different countries. To make meaningful comparisons, we need to look at GDP per capita at purchasing power parity. This metric adjusts GDP per capita for spending power, accounting for different costs of living in each country. So over here is the chart that I pulled from Trading Economics for Brazil GDP per capita PPP. And we can already see here that the forecast in Trading Economics is that this is going to continue to grow, which means that the amount of growth that the country is experiencing as a whole when compared to other countries on a universal metric, it's doing very well for itself, pretty much up and to the right for the next few years at least. And if we continue looking down here at the Colombia GDP, and remember, NuBank operates in Brazil, it operates in Colombia and Mexico. However, Brazil is about 80% of its revenue, so that's going to have a much larger, profound impact on its revenue and sales versus the other two countries. But these are going to be important because in the years to come, the other two countries, Colombia and Mexico, they are due to expand as far as revenue goes. So let me go back to this. Over here, this is the Colombia GDP per capita PPP, and we can see here that that is increasing as well, which is really good. And for Mexico, we could see that is increasing. It's supposed to increase. Actually, they haven't posted their GDP for 2024 yet, so it is supposed to increase, but it's supposed to re-accelerate going into 2025 and 2026. So that is really good news. So I think that's about it. Gross domestic product GDP serves as a productivity growth rate for most nations. However, we have observed that every country where NuBank operates is not only growing, but also projected to either sustain or reaccelerate this growth. Concerning pricing power, it has shown a consistent rise over time, aligning with pricing power parity. So this is really good news because if you take the consumer into consideration when it comes to NuBank and its clients, their clients are specifically the population, is doing very well overall, which means that they will likely increase their deposits and likely take more credit out as they become more confident in their own growth and increase their net worth and so on. And that would actually be pretty consistent with the non-performing loans that have actually decreased over time from the 15 to 90 day, because the the credit risk for each one of their clients is actually improving, which means that unfortunately, NuBank won't be able to make as much money as far as charging interest to account for that risk for each client. It is still good in the long run, because then that means that the amount of assets under management for the bank will increase as a whole, and so will its operations. So the next section we have here is inflation trending down. I'm going to talk a little bit more about the inflation in Brazil. Monetary policy is quite complex. To combat inflation, central banks typically tighten monetary policy or hike rates to counteract price increases that surpass wage growth. We've seen this recently with Brazil. Higher rates aim to curb price increases, which in turn can diminish the power of local currency. For instance, if a gallon of milk cost $2 last year and now costs $3, that's a 50% increase in inflation for milk. If your salary only increased by 25%, your purchasing power for milk only went up $2.50. Thus, you ended up paying 50 cents more for the same gallon of milk. This example, when applied to an entire population with many more variables, has a much more significant effect than one might realize, and markets react in real time as new data emerges. We've seen this with pretty much the US in 2022. It wasn't such a great sight for 2022 because it was a similar situation. Inflation was still increasing at a rapid rate while decelerating. Wage growth was not increasing at the same rate. And in addition to that, GDP was also I think it contracted for 2 quarters consecutively, which it technically is a recession, but I don't know. We'll go beyond that one. But for the most part, it wasn't so good with inflation increasing and GDP dropping. That is a negative backdrop for the entire stock market, which explains why we got into that bear market very quickly in 2022. If we take a look over here at the inflation rates for Mexico, Brazil, and Colombia, which is where NuBank operates in, we could see that inflation as a percentage is actually decreasing and decelerating all of 2024, but we did see that uptick and reacceleration in inflation in Brazil. So let's see what happens to 2025 as far as that goes. Brazil monetary and fiscal policy for 2025. Currently, NuBank derives 80% of its revenue from Brazil, making it a focal point for the company's operations compared to Colombia and Mexico. Since August 2024, Brazil has experienced a rise in inflation, prompting the central bank to increase rates by 100 basis points from 11.25 to 12.25%. Financial analysts in Brazil predict that rate hikes will conclude at 14.75% by December 2025. And we can see it over here in this chart. Analysts bet an extended rate hike cycle terminating at 14.75 by the end of 2025. So if that actually does happen, that might not be so good for the sentiment outlook for Brazil. I mean, you know, that's kind of like when you go back to 2022 when the Fed hiked rates all the way up to 5.5%. I think it was a 5 and 25 basis points to 5.5% up until July of 2023. Brazil might start to see the same thing. However, with that being said, I think a lot of that was actually priced into the market already. So it does create a pretty good setup for 2025. Okay, I think that's about it for that one. So Brazil government expenditure cuts. So basically government spending in Brazil hasn't necessarily slowed down. But it has been, they have been counteracting it. Additionally, Brazil's fiscal policy under President Lula has been geared toward increased spending to counteract potential economic slowdowns, while the central bank combats inflation with higher interest rates. This situation is more pronounced than what was experienced in 2022. However, it resembles mid-2023 when there was speculation that the Federal Reserve would continue raising rates, culminating in their latest hike in July 2023. We might have seen the final rate hike in Brazil, or there could be deceleration of monetary policy tightening moving forward. This will create a more favorable environment for spending, wage growth, and overall economic expansion. So if we take a look over here at the chart of Brazilian government spending, and this is actually predicted all the way through 2029, we can see that 2020 saw a major uptick and acceleration in spending up until 2024. But if you look from 2024 and beyond up until 2025, you could see that it's still increasing. I mean, no government is really ever going to spend less money every single year, but the rate that it actually is increasing is kind of flattening out. So while it is still increasing, it's not accelerating. That actually is good for as far as the debt to GDP ratio for a lot of countries. In Brazil, it might not be as significant as the US for debt to GDP, but it is certainly decreasing the amount of inflation, because if the government spends less money, that means that pricing power, that means that priced goods are not increasing as quickly. So something to note is that the Brazil central bank, well, it's not certainly the case anymore because they did get a new chair of their central bank. So think of it as like Powell no longer being the chair of the FOMC, it's now someone else. In this case, for Brazil, Gabriel Galopolo is the new central bank chair in Brazil. And I'm going to read this excerpt of it. And if you guys want to learn more about this, you could definitely Google some more. But this is actually pretty interesting. Brazil's central bank presidential changes. Gabriel Galopolo, the new chair of Brazil's central bank, assumed his position on December 19. Known as President Lulu's golden boy, Galopolo had connections with both left-wing and right and private sector. Despite recent interviews suggesting that he might raise rates to 15.5%, his ultimate goal is to aim his ultimate aim is to foster a continued expansionary environment for Brazil. His goal is to cut rates in 2026, providing a short-term boost in growth. So you got someone in a central bank chair that is very pro-growth, and in order to facilitate that growth, rates cannot be as high as people expect them to be. But he knows what he needs to do in order to tamper down inflation for the entire economy. On top of that, Gary Polo is also known as President Lulu. President Lulu is Brazil's president, his golden boy. So think of this as in terms of like in 2017 or 2016, when Trump nominated Jerome Powell to the FOMC. This is a very similar situation. So you have basically the presidential cabinet and you have the central bank thinking on the same side of the bridge. I mean, that's good news. That's a pretty bullish setup, in my opinion. Also, he is favorable in private sector. So he's going to make it so that way you're going to get a lot of, you're going to promote a lot of capitalism society. And ultimately that will lead to increased price wages and increase productivity and growth, especially for a lot of the corporate economy in Brazil. I mean, in my opinion, probably one of the best people you could put in the central bank. But again, I'm not from Brazil, so I don't really have that much say as far as politics goes. But all I could say is this is probably good news for a lot of companies that are out there, including MercadoLibre and NuBank, which are big positions that I have. So to sum it all up, the macro bearish narrative. Overall, the outlook for 2025 has shifted as inflation remains persistent, but spending has decelerated. It's important to remember that the market anticipates future events based on multiple news sources and market price movements. Much of this seems to be already factored in. There is potential for further declines, but this significant bullback in the Brazilian real and the Bovespa stock market has entered fear territory. There was actually a chart that I saw that it was from Bar Chart. You know what? I'm going to share this chart first. Hold on. Let me make sure I'm sharing the right screen here. A lot of what I've said to people is that really emerging markets, they have a heavy impact based on how strong their local currency is versus the US dollar. And in this case, for the US dollar has been in a relentless rally since September, when the Fed cut rates by 50 basis points. And this chart here is pretty much an overlay of how the US dollar performed of Trump's presidency in 2017 versus the current inauguration of his presidency. So we could see here that on this chart, actually, let me zoom in a little bit. We could see here that around September, the US dollar rallied to where it is today, and it followed the same pattern back in 2017, sorry, back in 2016. And then from then on, we're already in January, it saw a massive depreciation. It looks like over here, this is like about 6%, and we are a bit higher on the US dollar. I think we're like around 108. And from what it looks like here, the US dollar could retrace a good amount. And again, if this happens, this is actually pretty bullish for emerging markets. So then that means that Brazil's currency will probably see a little bit more appreciation, and therefore the stock market might have a little bit of recovery. You know what? Actually, let's look at some charts over here, because I haven't looked at the charts for the Brazilian real since the dollar made its peak. I think it was last week. Let me share that screen. All right. So let's look at the US dollar here. I'm going to take away these plots. And let me hide this one. Okay, so the US dollar had a massive down day today. I did notice that one. Actually, wow, it actually went down a lot further than I thought it was going to go down. So the US dollar went down about 59 basis points, 0.59%, which is really good. It made its high around 109.533 and has already pulled back. So if we take a look at the chart, I'm just gonna, no, I don't want to share that whole window. I don't want to show you guys what I'm doing. So if we look at this chart over here, we're probably around here. Yeah, we're probably around here, which means that according to this chart, the US dollar could retrace about 1 to 2% until mid-January. And then I wish I could switch these screens a lot faster than this, but I can't, unfortunately. So yeah, we should see the US dollar come back to around 1.75 or 1.70. And how did the Brazilian real act against all that? It pulled back a little bit, but the Brazilian real actually did get a little bit weaker today, ironically, against the US dollar. So we'll see how that all turns out. But I mean, just look at this monstrous rally in the US dollar against the Brazilian real. So basically, if you take the inverse of this, actually, let me do it this way. It'll be easier to, yeah, here we go. So if you take a look back in September, actually go all the way back to the beginning of 2024. So the Brazilian real has pretty much lost its power against the US dollar up until June last year. And it's really just been choppy the whole way until September, when the Fed started cutting its rates, and then it just like dropped like a rock. So if we see the Brazilian real come up to here, there's a very good possibility we might see a retrace in the Bovespa, which is a Brazilian stock market. Let's actually overlay the Bovespa. Okay, so yeah, it was like right around here, the Bovespa dropped down and then reached the low point where it is right now, around 120,000. That's so funny. It's like, yeah, the Brazilian stock market's at 120,000. It's just 120,000, whatever. But actually, I think this is in Brazilian real currency. So let me just put it in USD, because I think that's what I'm used to looking at. Yep. Yeah, USD is what I'm looking at. Okay, so I mean, obviously it's not near its all-time highs back in December, but I mean, this is a pretty hefty drop on the Bovespa, the Brazilian stock market. This is one of the reasons why, the sentiment's gotten pretty bad in Brazil. Of course, the stock market isn't an actual indicator of how the economy is doing, but it definitely is forward-looking. So when you see something like this, you're not really going to feel too confident to hold your positions in Brazilian stocks, which is MercadoLibre, NuBank. But if this retraces back up here to maybe about 50%, NuBank should be like around $13, and MercadoLibre should be around like 2,000 or 1,900, which would be pretty good for myself. But yeah, that was the chart that I had for the US dollar. And there's also an interview that CEO David Velez had a couple of months ago, which I will actually put the link over here in case you guys want to watch this video. It's actually pretty good. I mean, I enjoy talking to this guy. He if you guys don't know, David Velez, the CEO and founder, he's from Stanford, dude. So I mean, that's no joke. Like, I'm not as smart as this guy, but like a lot of the bright minds came from Stanford. There's the Grab CEO. He was from Stanford, and I'm sure a lot of other CEOs attended that business school. Really, and I was talking to Kris about this yesterday, is that when you're going for your MBA, you're not going because you want the degree. You're going because you want the networking that you're going to get from the school. And in this case, actually in a different case, MercadoLibre, Marcos, the CEO and founder of MercadoLibre, he actually also went to Stanford, and that's where he was able to poach to his initial investor in the preceding. But he also pitched his business, MercadoLibre, to Warren Buffett in 1999, and Warren Buffett basically said, no, I don't invest in Latin American companies. And then what do we know? Like 15 years later, he invests in NuBank, which is a Latin American company. So, it kind of says a lot. I'm not saying that, Warren Buffett's going to pick everything, perfect, but like the fact that Warren Buffett is invested in NuBank does kind of tell you something. Let me actually play this clip for you guys, just a few minutes, and then that'll be it for the stream.
Market share in credit card, 7% market share in personal loans, 2% market share in investments and savings. So there's a huge amount of growth still within the 60% of customers that we have in Brazil. And a lot of our growth is going to continue gaining share every month across every single one of those verticals.
Move, buddy. Move.
We began Mexico about 4 or 5 years ago, and we're now about the 5th largest credit issuer in the market. And it's early days. Mexico has 12% credit card penetration. So I don't think we necessarily need a huge trajectory change. It's more about executing this plan where a lot of the market cap and a lot of the services of bank to customers are moving away from incumbent banks into digital banks.
And I want to know more about that, because 60% of the Brazilian population means, I think it's what, 105 million clients here?
That's right.
It is an amazing number for such a young company. But to your point, you have a smaller percentage of the national wallet share. People with NuBank accounts do often a lot of the rest of their banking at the traditional banks, some of which are here, by the way. Itaú is here, Bradesco is here. How do you change that? How does NuBank capture more of the wallet share so that it's not just a purple credit card that you pull out of your wallet, to show people how cool you are, that it's actually where you get the lion's share of people's business?
Yeah, what's amazing is for over 60% of our customers that have been with us for over 12 months, we're already the primary bank account. So if you think we have 100 million customers in Brazil and we're the majority primary bank account for those, NuBank is already the largest primary bank account in the country, bigger than incumbent banks. That's something you haven't seen really in any market around the world, where fintechs are able to build wallets, but making that transition from wallets to primary bank account is extremely hard. We've been able to already accomplish that for the mass market. We haven't been able to accomplish that for the high income. That's a much harder challenge. It's a much more competitive segment. That's where incumbent banks do have branches, have private bankers, have a lot of service. We don't have that. I don't think we necessarily will get there, or we need to. So there is another sort of next level challenge of figuring how to do that in the app market. And that's the combination of more investment products. There is a lot that we need to do in the investments product to create already a very good investment proposition. We have to continue increasing the type of products that we have. We launched about 12 months ago what is called in Brazil consignado, which is a payroll loan backed for government employees. That's the largest profit pool in the country, over 600 billion reais. It's effectively lending backed by the government. We just launched that, and a lot of Brazilian public employees are high income, so that's a way to get high income. Small businesses, we're already the largest, about 4 million small businesses. We're banking with them. So we're already one of the largest providers of services to small business, and a lot of those small businesses are high income. So anyway, it's a much more competitive space to be primary bank account in the high income. I think we're laying out the ground. It's going to be a multi-year challenge, but there are some differentiators to get us there.
So that's good stuff. That's good stuff. Yeah, recommend you guys watch the rest of that interview. I'll put it in the show notes as well. And yeah, that's about it for today. Hope you guys enjoyed the video. Please make sure to visit the YouTube channel. Check out the previous video that I released the other day. And we got lots more content available for you guys. All right, take care.